Welcome back for another top-notch video this week, guys. We're talking about the 10th of September through the 14th of September, and let's kind of get right into it. If you are new to the channel, we go over the TSP, stocks, Roth IRA, brokerage accounts, retirement accounts. If you have any of those or interested with increasing your balance, this channel is for you. For TSP folks, we go over the CSI and F funds. For brokerage IRA folks, we go over the ETFs IVV, VXF, EFA, and HEG. If you don't know what those are, this equals the S&P 500, the Dow Jones, international markets, and bonds. That being said, let's get into our general analysis and then a broad overview and then a more specific overview. So some of the things I want to bring up this year is the yearly charts. So with that, as you can see, here's a 2018 year-to-date returns chart with VOO, or another symbol for IVV, kind of the same thing, sitting around just above 8%. As you can see, the biggest takeaway from this chart is we have an overall market sitting around 2%, and then EFA is kind of sitting in that bear market below at 4%. We were in EFA, or the I fund, for the first month of January, and that panned out very well for us, and we have not sat in that fund ever since because of the return we've seen and what we've seen in our chart so far. Basically, staying out of that fund has saved us almost a 4% loss for the year, so that's been excellent. Moving on, let's kind of get into our broad analysis with some of our charts. This is from TSP Talk. Tom does this commentary. So show some good charts. These charts are from Thursday, so just keep that in mind. As you can see, we are coming off of a small bounce here for the S&P 500, the C fund, IVV. It's staying within its trend lines for the most part, just bounced off that moving average. We kind of assumed, since it's been staying above that green trend line, that it would continue to do that. But we just see something in our more specific analysis that we are waiting on. So we'll have to see next week if we see that, and we'll show you that a little later on. As for the S fund, or VXF, we are in the middle of our trading range. Also hit that moving average. Have not really seen it. We're kind of waiting to see what it will do from this point on. Still not that high here, and as you can see with this chart too, not at the high just yet where we pulled out. We pulled out somewhere here towards the end of August. So just keep that in mind. That being said, let's move into the I fund. As we know, the I fund's kind of in a bear market where we see lower highs. And we did see that it was coming off its trend line back in September, off the lower trend line, and it did rally quite well this week. But with it being in a bear market, we're just not willing to take the risk, and especially since it was towards the beginning of the month, we just didn't have the moves. We're in our TSP, you only get 2 moves to move into EFA or the I fund. And then finally, we have HEG, or bonds. With that, we're seeing a little bit of a breakdown now, moving past its trend line and getting into these moving averages. Not really a good place to have your funds. That being said, let's look at the yearly returns here on this chart for the TSP. So this is your C, S, I, and G, C, F, S, and I funds. As you can see, we had that big gain in January and then quite a divergence here in September. As you can see, we have the I fund down at the very bottom there, followed by the F fund. So those are underperforming the basically 0% rate, which our base mark is the G fund, which is sitting at almost 2% now for the year. Doing very well with the S and C funds, as they are all the way up. And a good reason I bring this chart up is if you're a TSP investor in your life cycle funds, look at these different varieties. You have 3 funds down here that are very close to 0%, whereas you have 2 that are very towards the top. If you would have been invested or watched our channel, you would have been more up in this range versus this range. And if you're in the life cycle funds at all, you're not even above 5% for the year. You're still sitting below, basically 5% for the year. And with inflation, that's not going to help you out. So just keep that in mind if you are in the life cycle funds. That being said, let's look at our weekly returns. So for this week, we did have a positive week across the board. We gained 1% in every one of our funds for the C, S, and I fund. I fund really did take off this week, with the S fund just barely gaining 1%. Still down for the month for the S fund and the I fund, and up just a little bit with that C fund. Like I said, I want to, in the more specific analysis when we go over later, we'll show you guys why, where we're at for the most part. Moving on from this, we can start looking at our individual funds. So we'll start with the C fund or IVV. As you can see with our chart here, still sitting above the trend line. It looks like it's coming back towards its top. Didn't have any gain for Friday for the most part, a very small gain for Friday. If we look at it with our more specific charts, or our charts are looking into the analysis, the reason we didn't jump into the C fund is we're still seeing a weekly decline on our charts. It's always good to trust the models that you're a part of, and our models show the charts going from a DO to oscillator from 3.91 down to 360. Now that blue line is still above the red line. The major indicator we're kind of waiting on is this 2-day chart here. As you can see, the blue line is a little bit below the red line on our 2-day chart, and we haven't really hit negative territory. We did hit it just today. I'm very curious to see. Charts are just kind of very mixed right now. I don't have a very good signal to either jump it back into this or not, and I don't want to waste a move doing that into IVV or the C fund. Now the 4-hour chart is doing pretty well. We did see that jump back up, but we're going to just spend a little more time looking into it next week before we decide to jump in and get back into this fund. So we've been waiting. I know I said I was going to try to get in it probably as soon as possible towards the beginning of the week, or the beginning of this month, and I'm glad we didn't. We stayed out for a while, and we started to see kind of a change in the charts right around the 10th and the 11th for the most part. So moving forward, we're going to look at the S fund. So with the S fund or VXF, what we have is we're seeing it just sit on its trend line. It is moving up ever so slightly, but it's just sitting on its trend line, and it doesn't want to break that trend line or that moving average. But like I said, we need to have some chart support with this before we jump back into this fund. If you look at it from our chart perspective, we had a flat week last week, so that always makes us cautious when we see that. We see a 150 on the weekly chart. We had a 1.50 on the DO, and then a 1.50 the next week, and then this week we had a 1.55. So it is increasing just a little bit. What we're waiting on again is probably the 2-day chart. We need to see this turn a little bit positive for us to get back in this blue line, cross the red line. And we might take a little bit of a hit for that. We didn't jump in off these percentages here, and we didn't take advantage of the 1% dip that we saw, but I'd rather be a little cautious, especially with up at 12% already for the year, since we're sitting at 12% for the year, which is very good. It's above historical averages. I would rather just play it a little cautious now, moving into one of the worst months of the year, and just see where these things go. As always, we don't forecast. We look to these probabilities, and the probabilities are just kind of mixed right now for VXF or the S fund. Moving forward, let's look at international funds or EFA. Now, this one was a very interesting one because we did see it last week towards the bottom of this trend line here, and we thought that might be a good time to capitalize on funds. Just because it was towards the beginning of the month, though, we didn't want to waste one of our moves into the I fund and then get into something worse. Like I said, you'll never know what markets do. They did rally quite significantly this week, gaining over 1.5%, but it is in a bear market, and it's just playing with fire. And with our gains, we don't want to play with fire right now. It's just not something we're interested in. As you can see, lower highs, like I mentioned before, kind of sitting in these trend lines, bouncing back and forth between those lines. On the charts here, basically on a weekly chart, we did see another positive energy here, but we're seeing a number of fake outs here. We saw the first fake out here with our DO, and then another fake out here with our DO, and then will we see another fake out here with our DO? We don't know. But what we're seeing is about 1 or 2 weeks of negative activity and then 1 or 2 weeks of positive activity in a downward spiral with EFA or the I fund. And so we've just kind of stayed out of that fund. Has not really crossed this entire year, really. The whole year it's been, besides the month of January, which was the only month we were in the I fund, this fund has just underperformed all the other funds. So we've stayed out of it for the most part. We did jump in a little bit in August and took advantage of 1%, about a 1% gain here, and we thought about doing that for September and just didn't do it. And we're just doing that based off risk, guys. Always about off risk. You want to make sure you are mitigating risk, especially in these markets. Especially towards the end of the year now, as we're getting into fourth quarter, we want to make sure we hold our gains and everything that we've worked so hard for the year, and not try to just lose that in a couple of days, because you can definitely do that with markets. Moving into AGG or bonds, as we said for the entire year, we're not going to change our story here. Bonds have not outperformed stocks, and as you can see from June here, since we had this high, it's just for months now, it's just gone up and down, and we even saw a breakdown from the trend line here. So very, very bad things here. I'm not interested in bonds. I would not be in bonds. If you are in the life cycle funds for TSP folks, you are in AGG or this F fund. What are we seeing on a weekly chart? We are seeing the energy start to decrease. The lines are starting to come together here, and a lot of negative activity price-wise the last 2 weeks for bonds. So not good there. Even bad things on the 2-day chart. So I would stay out of bonds for the most part. That is pretty much our analysis for this week, guys. Let's move to our allocations. So as always, we moved to the G fund on September, or was it 20? I think it was the 24th or the 26th of August. We've been there ever since. We did have the September allocation go to the S fund, so we did have that go in there with all the rest of our funds in the G fund for right now. Not moving back just yet. I do probably anticipate a move next week if markets improve, if we see that 2-day chart improve, which we could see as early as Monday or Tuesday next week, making that move. But for the most part, this is where we stand for the week. We feel pretty good about it. What do you guys feel about our position? Do you think we should have jumped back into the markets last week, or do you think we should have stayed out? As always, please like, subscribe, or share. We do really appreciate your guys' support. And that's another top-notch video. We'll see you guys next time.